Let's talk about Tech Mahindra a little bit more. It's a solid all-round performance for the company in the first quarter, and that's fired up the shares of Tech Mahindra. I spoke about this. It's up as much as 8%, in fact more than that, and deal wins have remained robust while the management has assured that the company will grow in the early teens. Poonam Sane caught up with CP Gurnani, who is the Managing Director and Chief Executive Officer, as well as Milind Kulkarni, who is the Chief Financial Officer, to get some details about the prospects that the company sees. Here's an excerpt of that conversation.
Yes, it is, to a large extent, we had given you an indication at the end of Q4 that the company's pipeline, the company's, backlog of the large deals, and also the overall momentum of business is one of the best. And I would only say it has become better. And so we do believe that the company will and has delivered a well all-rounded performance with growth across all the key markets and the key industry sectors.
Mr. Gurnani, we've seen strong growth across all the key markets and across all the key sectors, and strong deal wins also of nearly around $800 million. What's the give us more color in terms of the demand environment that you're seeing, especially in both the communication and as well as the enterprise vertical across the industries? You've seen broad-based growth, but how strong is the overall deal momentum across verticals and geographies?
So the good part of the current quarter's performance, and it is an indication to the performance of financial year 22, is that comms, media and entertainment has grown 3.2%, and the enterprise business has grown 4.7% quarter on quarter. Essentially, what it has shown is technology sector is our highest growth vector. BFSI continues to be strong. Healthcare in US continues to be very, very strong. And more important is manufacturing is back on the high growth path. I'm also very pleased with the service lines. BPS has grown 11% quarter on quarter, and we see a very strong demand here. Platforms, which is platform as a service, we have seen about 60 wins in the quarter one of FY22. So overall, I can only say is a stellar Q1 performance, but more important is the demand and the pipeline is stronger than ever before.
Right. Milind sir, my question is to you. We're seeing the EBIT margin performance surely being far better than expectations during the quarter. It's a decline of just 160 bips and across the board, and we're working with at least a 200 bips margin decline. Hence, it's definitely better than expectations. What's your EBIT margin outlook given the rising attrition level and given the fact that some of the cost benefits are really waning out?
So, Poonam, we ended the quarter with 15.2% EBIT margin. And going forward, there are tailwinds as well as headwinds. But we remain confident that we should be in this trajectory of upwards of this for the remaining 3 quarters.
Okay. So let me put it this way. Attrition has been rising for the industry and even for TechMahindra, right? It's at 17%. It's one of the highest, at least for the top 5 players, I would say, during this entire quarter itself. So how do you plan to manage the attrition levels? What are the kind of wage hikes, promotions, hiring plans that you have? And hence, what is the kind of impact it may have in terms of your margins?
See,
Milind, you are going, or sorry,
Okay.
Poonam. So let me give you a color. So number one is we hired about 5,000 people. Our attrition for the last 12 months is at about 17%. I believe that Tech Mahindra would be a net hirer around and across the globe. And we have development centers in Canada, US, Europe, UK, Ireland, and also in Philippines and different parts of Asia. Though, yes, the majority of the hiring will take place in India. I also believe that our investments into tier 2 cities of India, Nagpur, Trivandrum, Chandigarh, Bhubaneswar, will help us manage attrition a lot better, because we are one of the few companies which took a forward call to invest in the tier 2 cities. Number three, yes, the demand is high, the growth is high, and we had earlier budgeted 16 to 18% attrition. Frankly, I will be watching the trend dynamically. If required, we will plan for additional hiring. But as of date, with the current plans, I think we should be able to service our clients, continue to focus on talent management, continue to work on potential to create more capacity. And overall, since we have a global footprint, 90 countries, and I'm also very happy that one of the companies we acquired, Digital on Us, their all development facilities and a high-end DevOps is in Mexico. So we are getting more capacity in Brazil, Argentina, and Mexico. And hence, I can only say is that we are in a good situation to address the demands of the market.
Right. So last time that we had interacted with, you had stated and guided for a double-digit growth in FY22. I have a two-part question here. What would be the key drivers of double-digit growth in FY22? Is there a number that you can put in here? And secondly, can we expect a double-digit growth running into even FY23 or maybe even FY24? Do we have that kind of a visibility at the moment?
There is a broad-based demand here. Our focus on 5G, our focus on customer experience management, and that's why you saw BPS growth of 11%, because it is digital BPS. It is customer experience management. Quarter-on-quarter growth of 11% in customer experience management and in 5G clearly shows that our investments are now paying off. The second part is that auto, industrials, and mining technology are the sectors where there is a buoyancy. You have seen, while you cover other sectors, you have seen how the commodity pricing is driving the mining industry. How auto sector is, back to buoyancy. So I think overall the economic outlook and Tech Mahindra's investments, when I couple both of them together, I feel a little more confident about our trajectory and our own differentiators for the market.
Right. Milind sir or CP sir, either of you could choose to answer this. You just stated that the 5G opportunity is huge and we should see revenue starting flowing in. But is there a timeline as to when would we see the revenues coming in from 5G flowing in, and what is the quantum of revenues that we can see coming into the financials and when?
So Poonam, we don't report 5G revenue separately, but if you've seen communication, which is normally a bad quarter, have shown growth, it is only because they have signed 2 deals in 5G. So I think 5G is back. 5G is contributing to comms growth, and hopefully we will continue to see the same momentum over the next 3 quarters.
Right. Milind sir, you mentioned about margins being sustaining in the band. What are the key margin levers that Tech Mahindra has for a sustainable margin?
So obviously there is going to be an operating leverage which is coming because of the growth that we are seeing. Second, we will continue to work on operating efficiency. Okay, maybe it's in terms of offshoring, maintaining utilization, which is at 88% is quite at a peak, but we will continue to work on that. And we would expect some tailwinds coming from the management of subcons, which is at an elevated level. Maybe it might even remain elevated in the second quarter, but thereafter we should be able, with COVID restrictions going away, we are hopeful that we should be able to even manage that, and something which we have done very well in the last year. Okay, so that, I think these three should really help us to take care of the headwinds which may be there in terms of a higher attrition and so on, and maybe related cost increases which are there. And that's why we feel fairly confident to improve maintain the margin and maybe improve it a little bit.
Right. Okay, I'll just take one last question. Sure. Do you see this work from home to continue even for the next entire year? At least in India, yes, we do have the third wave uncertainty. But what is the long-term plan in terms of the operating model? Would it be a hybrid operating model going ahead?
So Poonam, our request to employees who want to come back to work, and there's a lot of people who are very keen to come back to work, is please get doubly vaccinated and then come back to work. However, sometimes the client situation, processes, or the way managers work, we have seen that even during the worst pandemic times, we had 6 to 7% attendance in our offices, which we are right now seeing has gone up to about 20%. But it is voluntary. Till December, we are not legislating that people come back to work and work from office. But the hybrid is already on the voluntary basis started. And as I said, as I speak today, I'm calling you from the office, and there are about 20% people in the office.